Welcome to Talk Tickers. Today, we're digging into JetBlue's latest earnings call. The market did not like what it heard, but management says they've got a big comeback plan for 2026. So let's break down what's really going on with ticker JBLU.
All right, here's what we're going to cover. First, we'll look at the market's immediate reaction. Then, we'll get into the actual numbers. We'll walk through management's big turnaround plan, put it all into context with the challenges they're facing, and wrap up with our own take.
So first things first, how did Wall Street actually feel about this report? Well, you only need to look at one number to get a crystal clear answer. Ouch. There it is. The stock dropped nearly 7% in a single trading day. Look, that's not just a little dip. That's a loud and clear signal that investors are seriously skeptical about the company's future. So the big question is, why? What exactly spooked the market so badly? Let's jump into the quarterly scorecard because honestly, the numbers tell a kind of confusing, mixed story.
And this is where it gets really interesting, right? You see this split decision. JetBlue actually beat what analysts were expecting on revenue, and their unit revenue, or RASM, was even a little better than they had guided for. But, and this is a huge but, the market completely ignored that. Investors focused right on the bottom line, a bigger than expected loss and soaring costs. That CASM number, which is basically the cost to fly one seat 1 mile without fuel, jumped almost 7%. That's the number that set off all the alarm bells.
Okay, so with the stock getting hammered, management had to come out swinging, right? And they did. They laid out a really detailed playbook for 2026, framing it as a total make or break year to get this airline back to profitability. And here's the headline, the core promise. Break even or better. That's the goal for this year. The whole strategy for getting there is wrapped up in this new initiative they're calling JetForward. And here's how the math is supposed to work. They're not starting from scratch. They say they already got over $300 million in benefits last year. This year, they're aiming for another $310 million. You can see the goal here is to stack these improvements, to let them compound, until they're adding nearly $1 billion to the bottom line by 2027. This is the engine they're betting the company on. So where's all this growth going to come from? Well, they're not putting all their eggs in one basket. You can see the biggest piece of the pie is coming from their loyalty program. After that, they're focused on pushing product upgrades and premium seats, and then counting on new partnerships to help fill up their planes. It's really a full court press on the revenue side of the equation. But let's circle back to that 7% stock drop. The plan sounds good, but the market is clearly not buying it hook, line, and sinker. Investors see some major risks that could completely derail this whole thing, and it sets up a classic bull versus bear fight. And this slide really gets to the heart of the tug of war. You've got management story over here, talking about strong demand, momentum, and executing their plan. And then you have the market story over on the other side, which is laser-focused on all the things that could go wrong. Those sticky high costs, engine issues grounding planes, and just the risk that, hey, maybe this plan just isn't good enough. And if you need any more context for why the market is so wary, well, this chart says it all. It's brutal. Over the last year, JetBlue stock has gotten absolutely crushed, down over 41%. In that same period, the airline industry as a whole was up, and the S&P 500 was up big. So this isn't just one bad quarter, it's a long pattern of underperformance. And that's exactly why Wall Street is saying, don't tell us, show us. Okay, so you've got a detailed plan from the company on one side, and you have some massive skepticism from the market on the other. How do we balance these two? Let's get to our take and what we're watching for next. This is really the billion-dollar question for 2026, isn't it? Management has put a plan on the table, but the market is basically screaming that it has its doubts. Can JetBlue actually execute and prove all of those skeptics wrong? So with all that in mind, our rating on the stock is market perform. We think the risk and the reward are pretty balanced right now. Yes, there's real upside if they pull this off, but the execution risk is just too big to ignore at this price. Here's the bottom line on what to watch for. When they report Q1, frankly, the results themselves probably won't matter as much as what they say about costs for the rest of the year. We think the stock is going to stay stuck in a holding pattern until the company can string together a few quarters that prove they've got costs under control. The potential is there, for sure, but right now, this is the definition of a show-me stock. And that's our breakdown for Talk Tickers. And as always, please remember, this is not financial advice.